Good evening, friends. This is Shweta here from banking sector. The PNB Housing Finance IPO begins tomorrow. So just a brief view over the same. So while the issue opens on 25th, it closes on 27th October, that is Thursday. 750 to 775 is the price issue band, which we already know. So the bid lot is somewhere around 70 equity shares, and in those multiples thereafter, the issue size is around 3,000 crores. It is definitely a fresh issue. There is employee reservation for PNB Housing Finance and PNB employees of almost 2,50,000 shares with employee discount of 75 rupees per share. For qualified institutional buyers, 50% of net issue is reserved, and for retail, 35% of the net issue is reserved. So, what is the object of the issue? Now, object of the issue of PNB Housing Finance is primarily to raise capital and augment its tier 1 capital base, which is currently below the regulatory standards. Secondly, this capital base shall also be used for additional operational purposes. Now, just to give a brief background on the company, incorporated in 1988, PNB Housing Finance is almost 28-year-old housing finance company with parent company or parent bank being Punjab National Bank. It is one of the fastest growing NBFCs in India, housing finance companies in India, and has almost 47 branches across northern, western, and southern regions. It has almost 7,000 plus channel partners, which are spread across different locations in the country. Over the past 5 years, the company has implemented a business process re-engineering, in the sense that past 5 years have been a turnaround or re-engineering of the business, and today PNB Housing Finance stands almost fifth largest HFC in India, going by its loan assets, and also second largest in terms of retail deposits. The company's loan portfolio, which today stands at around approximately 40,000 crores, has shown almost 62% CAGR growth from FY12 to FY16. For the quarter gone by, the company's loan portfolio has actually stood up at around 3 lakh million. So the product offerings, now the products which are offered by PNB Housing Finance are home loans for the purpose of purchase, construction, extension and improvement of residential houses or residential plots, and they also offer non-housing loans. Non-housing loans are loan against property, non-residential premises loan, lease rental discounting and corporate term loans. The target customers comprise of salaried and non-salaried customers who avail for these housing loans. So, under the implementation of this new business reengineering process that actually completed or got completed in FY16, what happened in this reengineering process? The company actually underwent improvement, centralization, and standardization of business processes. They changed their payments and credit policies. There were changes in the origination and sourcing strategy, and also product composition and target markets also underwent changes. So the company today has developed a very strong IT platform for all its functions and business processes, and has improved efficiency and quality of operations. They have a complete new service model which has got additional channels of marketing and distribution, highly technologically advanced, and they have formed customer service portals, customer contact centers, so that there are easier accessibility of services of the company. So at the end of June quarter, that is the quarter gone by, housing loans formed almost 70% of the portfolio. Pure retail loans are actually 87% of this housing portfolio. The ticket size of housing of this housing finance company is almost 3 million, with average LTV of 66%. LTV is nothing but loan to value ratio. The average ticket size for non-housing loans stand at around 6 million, and average LTV for non-housing loans is around 47%. So after this issue, The Punjab National Bank's shareholding will be actually reduced to approximately 38-39% of the issued share capital, and Punjab National and PNB Housing Finance will cease or stop to be a subsidiary of Punjab National Bank, and therefore it will not be a government company but a private company. So post issue, PNB will remain the single largest shareholder with 26 or 33% shareholding, housing finance company, that is PNB Housing Finance, will be a separate private entity. Management profile: Usha Ananta Subramaniam, who is also the CMD of the Punjab National Bank, is also the chairperson of this company, and Sanjay Gupta, the managing director of the company, who has got significant experience in the mortgage industry and comes from one of the top housing finance companies. So, just quickly, we'll run through the strengths of this company. Punjab PNB Housing Finance boasts of a very rich distribution network of 47 branches and 7,000 channel partners. It has access to diversified, cost-effective funding sources, so the borrowing mix is quite robust. They have got customer-centric approach and very strong brand recognition. The credit underwriting and credit appraisals are prudent, always monitored. Collection processes are quite strong. Company strategy going forward will be to position and expand in specific target geographies and markets, reduce their cost of borrowings and raise deposits. They will maintain credit quality of their loan portfolio, and they will continue to enhance their customer delivery by using digital media and other technological platforms. So these are the few strategies and strengths of the company. Coming to the operating model of PNB Housing Finance, which largely depends upon technology and data platform, stands centralized, and the company is well geared to actually expand their businesses across geographies. The company, like I mentioned in the beginning, offers various product offerings, and today the loan mix, which is 70% housing finance and almost retain almost 30% is non-housing finance. So they have very right mix of the entire portfolio. LAP, which is little risky, is around 18% of the portfolio, but PNB Housing Finance has experts in place, whether it is underwriting department or technical evaluation or sales verticals or marketing vertical. They have separate departments for each and every vertical, and hence asset quality till date has remained impeccable. Now the view for this IPO. So I would just like to repeat. So So the historical credit growth of this company has stood robust with 68% CAGR in loans over FY 13 to 16. They have always maintained healthy growth trend despite very challenging housing finance market and property markets. So the current capital base is also going to help them to expand their branch network. They have always maintained 20% annual growth in their business. Besides, the current margin levels are on the higher side. Almost 36% of the borrowing mix of the company is through retail deposits. The credit rating of the company is very strong. So, therefore, going forward, higher levels of margins can be maintained. They also have higher share of LAP portfolio. LAP portfolio helps margin expansion. So that is going to help their ROAs as well. Moreover, asset quality over the years has been stable. 76% of their portfolio is only 2 year old. So this tells us that no major negative asset quality surprises. However, because the non-retail share or non-housing loans are on the higher side in their portfolio, this would mean there must be or there would be credit quality risk ahead. So coming to the valuations, On FY16 basis, the pre-issue PNB Housing Finance valuations are trading at 4.5x price to book at a book value of rupees 169. Now, post issue, the valuations are definitely lower. So, at 320 book value, PNB Housing Finance on FY17 basis will be trading at 2.3x price to book FY17, and on FY18 at 360 370 book value, the PNB Housing Finance would be trading at 2x FY18 multiple. Now, FY18 valuations are actually very attractive. However, there are certain downside risk. Once there is capital infusion in place, definitely there will be equity dilution, and ROEs, which are currently at 17% levels, will not be maintained at higher levels, at current higher levels. Also, going forward, asset quality pressures are going to be turning up on the higher side. One, because like I mentioned, there is higher proportion of non retail housing loans, and also a lot of book is unseasoned. So going forward, there will be aging of NPAs, and therefore higher NPAs and little higher provisions. Also, property market is not going to move up much for next 2 years, so that might have direct impact even on the growth numbers. So maintaining higher growth levels going forward may not be the case. So short term challenges definitely persist for PNB Housing Finance. It would be difficult to maintain higher growth and profitability numbers, and because there are risks which might emerge even from asset quality front, we believe that the IPO can be subscribed only for long term benefits. So short term challenges remain, as PNB Housing Finance would be expanding their branch network, which would lead to little higher cost income ratio. They would be even expanding their non retail portfolio, which might pose asset quality risk. And last but not the least, because there is capital raising, there will be equity dilution. So ROEs will definitely struggle to be maintained at higher levels. So all in all, our view remains it can be subscribed, but only to reap long term benefits. Thank you.
Everybody. Thank you for joining with us on the PNB IPO discussion. So, in case you have any kind of a query, please write to us on our an email ID, or you can call back to us. And also, please request you to go through our go through our disclaimer before investing in any kind of a stock that we suggest. Uh, Thank you. And in case you have any query, please call back to us. Thank you very much.